Hi, Spencer here, and today I'm going to talk about one of the questions which I get a lot, which is should I start off with trading or investing? So I'm going to start off with a quote from one of my favorite authors, Peter Thiel, and he says that you should think of where you want to be in 10 years, and next you figure out how you can get there in 6 months. So it's very powerful kind of way that forces you to think of your long-term goals and yet think of a faster way to get there, right? Instead of the traditional approach. So personally, when I was building up my portfolio, it took me about 7 years and a lot of struggle because I did not know what I know today, right? So after going through all that, I realized, there is a faster way to achieve financial freedom. So I'm going to share with you what are some of the things that I've learned over the years as I build up my portfolio. So first, about to compare trading versus investing. Trading is primarily a cash flow generation activity. So generally it is shorter term. So your positions will be in days or weeks. And the good thing about trading is that it provides you monthly income. This means that you do not need a lot of capital to start with. So as little as $1,000, you can start trading. Investing is more of a cash flow allocation activity. So for investing, you're looking more at a long-term approach, weeks, months, even years, as you build up a long-term portfolio. The idea is to give you a passive income, and the returns are usually measured on an annual basis. So the downside to investing is that you usually require a lot more capital to start with. So generally, I would recommend at least $100,000 of capital before you start doing investing. So the reason why I say that trading is more it's a more friendly to people who do not have a large capital, because if you look at the returns, if let's say you only have $10,000 to start with, and for trading, if you get a 5% monthly return, which is quite common for traders, you at least can get $500 income per month. Whereas if you are doing investing with your $10,000 and you make a 5% annual return, which is quite decent, you're going to get $500 income per year. And if you divide it by 12 months, that is about $42 per month. So you see that if you do not have much capital, investing is not a very suitable activity. So the idea is actually not really to see both as an either or, meaning you don't have to choose either trading or investing. The idea is actually to combine both trading and investing, but you need to focus on different activities at different stages of your financial freedom journey. So for example, at the start, if you do not have a lot of capital, you focus more on building your cash flow through trading, or to generate the returns. And afterwards, as you get more and more cash flow, more and more capital, then you can start looking up to build a long-term portfolio. So let me give you an example of how I build up my portfolio. The first, as I mentioned, trading income forms the core right at the center, and that is the what I call the cash flow generator. So that is what actually generates the cash flow and the income, which I can then use to invest in other segments to build up my long-term portfolio. So for example, you can invest in things like stocks, REITs, ETFs, real estate, fixed income, businesses, as well as wild bets like startups, cryptocurrencies. So the idea really is to generate the cash flow and then focus on allocating it when the time is right. So for example, in my personal portfolio, I have many different asset classes, right? Like my stocks, REITs, ETFs, some of the startups I invest and mentor, right? Properties, cryptocurrencies. So one of the very important thing about timing, about investing is knowing when is the right time to invest. And the best time to do so is really to invest based on the big market cycles. So everything has cycles. It's the stock market, the property market. So this is an example of how I time the property market to buy some of my real estate investments. And if you're looking to time the stock market, this is a simple tool which you can use to study the different stages of the market. So I'll not be going too much into detail because I'll be covering this in another video. So here are some of the key takeaways. The first is that you should start using trading as a tool to generate more cash flow. And then you invest using the big market cycles by studying the ups and downs of the different markets. And the most important thing is to have a lot of cash ready so that when the big crash comes, right, you can then invest your cash flow, right, your war chest. So for now, it is more important, if you don't have much capital, to focus on building your capital and your cash flow. So that's all I have for this video. And if you want to enjoy more videos and market analysis, please visit us at www.synapsetrading.com. And I'll see you in the next video.